Welcome to the Executive Innovation Show podcast, where we bring you real executive conversations with industry game changers and thought leaders. We ask the questions you're thinking, what you're scared to ask, and we make your brain hurt afterward. With your host, Carrie Chitsey Wells, co-founder and CEO of One Touch Video Chat, live video interviews, and the nonprofit Humans Helping Humans.
Hello, everybody, and welcome to today's Knowledge Nugget portion of the Executive Innovation Show podcast. Today, we're going to be talking about the rise in technology. We're going to be talking about digital banking and what are the differences between ITMs, VTMs, and video banking. We get that question all the time. What are the differences? What you should be looking at? We're going to dive in and break it down today so you have a very good understanding of it. First, ITMs and VTMs are sometimes used interchangeably, whether it's an interactive teller machine and that interactive teller machine is through video, then it's typically a video interactive teller machine. And then video banking, which is not video conferencing, which we're going to talk about too. So a lot of banks, a lot of credit unions have really put a lot of strategy around having that face-to-face connection with their existing customers. ITMs are for existing customers only. They're not for acquisition. So when we look at ITMs, they have to be tied to a physical location. Some banks have it at their drive-up where they already have drive-through, and some banks are using as a strategy where maybe it's a strip mall that they're not putting a physical, expensive branch, and it's just a drive-up interactive teller machine that connects back to a branch within a certain driving distance. Yes, ITMs are good. They're very expensive. They're good for servicing customers where you're putting in, you want to make a deposit, you have questions, you have certain acquisition, certain servicing type behaviors that you want to do. And as a bank, you want to have that high touch, be able to see the teller type of thing. It's typically manned, and the workforce behind the ITMs is all teller focused. So you're not having ITMs that go to a relationship manager or a loan specialist, things like that. It's all typically transactional type of things. Costs are all across the board. We get this question a lot. On the video ITM side, it can be $50,000 to $80,000 per ITM, $3,000 to $5,000 a month to service it. You need high-speed internet there. You need, there's a lot of kind of maintenance that goes along with it. So if you're looking at adding that, most people don't have that at every one of their drive-thrus because of the cost associated with it. So now let's compare a little bit to video banking. So I want to start off by saying video banking is not video conferencing. We obviously saw in 2020 a huge surge in video conferencing, video interactions across every facet, every segment, and every industry. So one of the top priorities for banks in 2020 and 2021 was implementing video banking. And most bank executives that have seen a true video banking solution, it has completely changed their mind on their ITM and VTM strategies because it's significantly lower in cost and critical. Customers don't have to get in their car and drive to a location. Convenience is key, and it allows you to broaden the footprint, to open it up for acquisition. So you now can do video banking. Video banking is for acquisition and servicing. So from an acquisition standpoint, having video banking right on your own website where you're spending your digital marketing dollars, driving your acquisition efforts there will help with your conversion rate and help build relationships, competitive advantage right out the gate. ITMs don't allow that from an acquisition standpoint. You're not going to have somebody that's going to drive to a physical location and try to open an account through an ITM. Doesn't happen. You're not spending your digital marketing dollars trying to get them to go there. The conversion rate would be terrible. And on video banking, it expands way beyond the tellers. So most banks and credit unions for video banking start with their high margin products, right? They start with wealth management. They start with their small business folks. They start with loans, mortgages, auto, things like that. And they start with wealth management, private client, things like that require that, affluent customer, that higher margin, that competition is critical, and they want to develop that relationship from day one. Think if you went to a bank's website, you started an online application process, maybe they have a text chat, maybe you have to call into a call center if you had a question. That's your experience number one. Experience number two, you go to a bank or credit union's website, you start an application for a business banking account or something to that effect. You click a button because you have a question, and boom, that video banker is right there as if they were across the desk from you and you see them. Take your experience A, experience B. Who are you going to bank with? You're always going to bank with the good relationship, that face-to-face. If you ask a customer, hey, when you called that bank, do you remember the person you talked with? 9 times out of 10, it's going to be a no unless they wrote it down. If you ask someone that's done video banking, do you remember the person you spoke with? 9 times out of 10, they're going to say, oh, I talked to Sally. She had blonde hair. She had this sitting on her desk behind her. She had this colored shirt on. All the details are remembered. We are a visual demographic. And then the next thing on video banking is it really helps with retention and your NPS and CSAT scores, which video ITMs, you might move a slight needle on that, not on retention, but on customer service, especially if it's after hours or the teller lines are closed. But on a retention standpoint, building that relationship, having that relationship manager, being proactive with that is really going to move the needle on adding more products to that customer, making them more value to your organization from an active user standpoint and evaluation, in addition to moving the needle on that retention, making you your margins much higher, and the payback on that acquisition moves in from that 3 years to the 2 years to 1.5 years, whatever it may be on moving that needle. So when you're looking for the comparison and what is right for your organization, if you're putting in ITMs to service customers locally, not driving distance, probably a decent solution. If you have the capital expense and you have the maintenance money set aside. If you're looking at video banking, you're trying to extend that. Video banking is a portion of the cost, so you could probably roll it out to all your branches, all your locations for the cost of one ITM. So if you have any questions on the differences, feel free to submit questions and we'll cover it on a future Knowledge Nugget. As always, please subscribe, stay tuned for next week's episode, and we'll deliver that knowledge to you and that nugget to you on a weekly basis. Thanks, everybody. As always, subscribe, and we look forward to next week.
This podcast has come to a close. To hear more from the Executive Innovation Show podcast, subscribe, submit questions, and share the love. Follow us on social. We're everywhere.